Good morning. Good morning, good morning. I'm late, but I'm here. Gosh, look at my messy office. Office clean. Look at that. Just like that. Good morning. Make sure you say hi. I'm going to hang out just for a few seconds, see if anybody else tunes in. Good morning. Did you guys miss me last week? Okay, for those of you that didn't know, it was my birthday yesterday. I love my birthday. You know, some people, I find this funny. Some people don't like their birthdays, and they think that it's a bad thing, that they're getting older. I love it. I love it. I could do without some of the aging things, but other than that, yeah, put a little hair color in and we're all good. But yesterday was my birthday, so I took some of the day off and did stuff for the house to get our house done so we can move into our new property. Good morning, Dave. Good morning, Lindsay. How are you? Hey, Jarrett. Farming and listening to me. I love it, Jarrett. Well, maybe you're not farming, front end loader. I don't know what you're doing. Well, thanks, Lindsay. Good morning, Jim. Thank you. Thank you, James. Yeah, I'm actually quite annoying about my birthday. Normally, like when I turned 40, so I'm not 40 anymore, but when I turned 40 a few years back, I did like a 40-day countdown, man. Like, it's my day. I share it with a few others, but it's my day around here. Like, it's my day. I get to make the decisions. We're gonna celebrate me. So I've been less annoying this year because we've been so busy with other things. But typically it goes like all week. It could even go all month. You don't really know. And my daughter's birthday is the 27th of June. So before she was born, I could even be more annoying because I could start in June already telling people. But I now have to I don't want to take away from her birthday. Are you guys seeing me okay? I'm getting warnings about resolution. I don't know. I don't know what that means. I mean, I can see it's running a little bit slow, but I don't know what that means. It's telling me to change them. If I knew how, I would do that, but I don't know how. Let me look quick. Okay, let me know if you guys can see me okay, because it keeps popping this warning up. I have no idea what it means. It doesn't give me a link. Okay, thank you, Lindsay. You're my go-to. You're hired, Lindsay. You're hired. Okay. For those of you that don't know and are just tuning in, I am Mary Jo Irmen, and I am the author of the books Farming Without the Bank and Life Without the Bank. We have a lot of non-farm stuff to talk about today, so if you are watching on my Without the Bank page, stay tuned. And I am teaching the infinite banking concept, which was created by R. Nelson Nash. And he wrote about it in his book, Becoming Your Own Banker, which I also highly recommend. Obviously, I even have it back there. So that is what we're going to talk about today. And I keep getting these messages. That is what we are going to talk about today and the clients that I visited with over the last 2 weeks, because I was gone last week, Friday. I know you guys are probably all bummed out. All you regulars, you're probably all bummed out and you're like, oh, I got up Friday morning to watch Mary Jo and she's not on. Okay. Seriously, Facebook. Thank you for helping, but you're not. First client we have to go over, they are running, this was really kind of an interesting scenario. She wants something for retirement, and she wants to see what they can do with their income to create some retirement. 52 and 60 or 51 and 60, something like that. And so they really wanted to know how they can do that. Well, then as we started digging into what they're doing, they basically created a multi-million-dollar business for somebody else. And they have no part of it. So I said, well, and there's key man insurance, so they've protected themselves for current, and it's term insurance. So they have, few $1,000,000 on the owner of the business. So they've been very smart and protected themselves that way. But they have some insurance on themselves for him, so if something happens to them. The crazy thing here is they're about the same age. That does not happen often, that you get somebody that's financially stable, and typically it's a younger person that we're going to bring in to run everything, but that is not the case here. Instead, here, they're about the same age. So if something happens to the owner of the business long term, like in 20 years, not a big deal, because these guys want to retire. If something happens in the next 10 to 15 years and that term insurance runs out, we have a problem. That is, and should we have some whole life in there to get us through? Absolutely. But here is the bigger thing for me, and maybe it's just me, but I find that sometimes very smart people are scared to ask for what they're worth. And so these people created this business. The guy has the money, they have the knowledge. It takes two to tango. They've never asked for a part of the business. They've never asked for shares to be bought out upon their retirement. Now they're making decent money, 6 figures a year. So between the two of them, so they're making decent money. They're getting housing provided and all that kind of stuff. And so it's not like they're not getting anything. But when we've built a business from thousands to multi-millions, there should be some sort of a, hey, when I retire or you sell the business, can we get some sort of a buyout in that process? So to create retirement, here's the thing. They have nothing for retirement. And she is very adamant that she wants all their stuff paid off. And they both came from nasty, crappy divorces where they kind of had to start over. They've carried a lot of financial debt from that divorce that they've had to pay off. So they're kind of getting back on their feet at their age. But to start creating some sort of a retirement account and saying, oh, I'm going to need $2 or $3 million, $2 million to live for the next 30 years, it's a little late to do that. And so really, like, what my conversation with them was, where do we want to create this income from? Where do we want to create cash flow from? You have cash flow today. You could save every red cent for the next 10 years. That's $1 million. That's still not going to be enough to retire for 30 years. So what do you want to do? Do you want to buy real estate? Do you want to buy land, farm ground? What do you want to do that creates cash flow? And just talking to her, it didn't sound like I couldn't really get a good answer. They want land so that they can live on that, or they will just live in their motorhome when they retire. But there wasn't a set. They are so busy building this business because they're phenomenal people. They're so busy building this business that they're not able to really ever sit back and say, what do we want when we're done working in this business? And so this is a conversation I had with a couple people in the last couple weeks, is where do we want the retirement income to come from? Because as much as I would love to tell you that the infinite banking concept is going to give you everything you need at retirement, I can't do that, because you're only going to have as much as you put there. You're only going to have as much as we create outside of the policy. And that's the thing. We need to create outside of the policy. That is why it's called an and asset. We can put our money here, and we can buy real estate, and we can start businesses, and we can do all of these things. That is going to be super important, and most people are not thinking of that. We need to start thinking of how are we going to create cash flow so we don't always have to work for somebody else and punch a clock. Okay? I keep getting this message, so I'm checking to see if you guys are saying anything. Hey, Eli. Hi, Tony. Thank you. But here's the other thing. I am typically a pretty bold person, and I'm not scared to ask for things. So it's really hard for me when I see very good people not asking because they don't feel the self-worth, or they don't feel that it's the right time or the right place, or they don't want to lose their job, and some of those things could be real. But if we don't ask, you're not going to get anything. And so just like these people, if they don't ask to get a part of this business that they have built, they're not going to get anything. If the guy on the other side doesn't feel the need to share, they're not going to get anything. The other thing is this happens a lot in the farming world. It happens a lot in the business world. We go to the bank and we need money, and we think that we are subject to them, that we can't ask for anything, that we can't put any demands on the bank, that we can't question what they're doing. Well, I don't know why the bank is doing that. I don't want to ask. I'm just lucky to get the money. Really? No. Yesterday, for my birthday, I was doing a little business coaching for a contractor here in town. And yes, that's what I did for my birthday. And I love it because I just could talk business 24/7. But he's a young guy, 29 years old. And he's not putting his foot down and saying, hey, I give you business. This is what you're going to do for me. Now, we don't need to be jerks about it. We don't need to be arrogant about it. But it's a fact. People need him as much as he needs people. It's a two-way street. We have to be decent. But it kills me when people don't see their worth. And then they just crumble and they let somebody else run everything for them. Why are we doing that? I get not everybody's like me. I get it. But just have a little bit of Mary Jo backbone, just a little bit, and say, you know what? No, this isn't okay. and I'm going to call you out on it. And so I have no problem doing that to people. And if I'm wrong, I have no problem apologizing. But you darn bet, you can bet your last dollar, I'm going to ask some questions and I'm going to call you out on something that you did that's not right. Because I get called out on stuff that I do that's not right. And guess what? I learn lessons from that because I listen to it. I don't brush it off with arrogance. I listen and say, well, maybe I'm not right. Maybe I better look into that. Right? We cannot continue to let the bank run our businesses. I don't care if it's a farm. I don't care if it's a business. I don't care what it is. We cannot let the bank continue to do that. That does not make any sense to me. Why we would, or why we're not looking for a different bank. There's more than one bank in every town. Banks, churches, and bars. They're everywhere. Okay? And you need the church. The church has to be the staple because the bank makes you mad enough that you need to go confess, right? If you're Catholic. And you should probably go pray if you're not. And then the bar, probably committing some sins in there, so you're supposed to go to church for that too. Oh, gosh, you guys, just don't let these people run your businesses. Don't let them run your life. Okay. Don't be scared to ask for things. The next one was super fun. I got to talk to 2 accountants. 2 that own a business together. One of them, the husband farms. Well, he actually ranches. But it was interesting because they bought some of his dad's bad debt. So dad was going into bankruptcy. They thought that they would save it. And now they're saying that's what's causing not their bankruptcy, but them not doing so well financially. They're breaking even every single year. Her business on the accounting side is doing great. The ranch side and dad's bankruptcy stuff is not going so good. So I said, well, what did you buy the bankruptcy stuff for? Like, how much did you pay for it? Okay, this is how much we can sell it for, minus what we owe on the ranch. I said, what's going upside down is the ranch. The ranch isn't making any money. I mean, the money over here is, yes, it's all wrapped together. That's the other thing. Oh, yes. This is the other thing. $4 million of land value with a $2 million loan, and guess how much the bank has collateral on? $4 million. Why do you need $4 million of collateral on a land that's on a loan that's $2 million? Payments have always been made. We've never missed a payment. What do we need all this extra collateral for? I can even understand maybe wanting $2.5 million just if value goes up, but $4 million? You need to take everything that they have, and again, we don't go in and question. Because he's taking care of the ranch, she's running a business. And guess what's happening? Doesn't sound like he's listening to her on the books and how we're going to pay for things and blah, 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 blah. So her off the farm income is keeping them afloat, but it's never going to pay her back. So we had to think of some pretty creative strategies. Does the daughter buy some of the land? Because she can go to FSA and get a 1.5% note or 1.6 or whatever it is right now for 40 years. That's going to drop those payments down and make those payments better. But here was my question. And because they have land for sale, some of it's commercial property land. And so if we can sell the commercial property land and we can get all that debt to zero, are we going to continue to go back? Are we going to continue to go backwards? Right? If you guys recall, if you have read Nelson's book, and this is so good, I'm going to read it because I know exactly where it's at in the book. Nelson said, if some authorized power distributed all the money in the world equally amongst all the people, Within 10 years, 97% of all the money would be under the control of 3% of the people. So what's happening right now? Right? 3% of the people have the majority of the wealth. 97 don't. What happens to lottery winners? They get all this money, and I just heard Robert Kiyosaki say it this morning. In 3 years, they're broke again. You can start at zero, but if you're not looking at your books and you're not managing your money, you're going to end up negative very quickly. I could give you lottery winnings and you're going to end up at zero very quickly, because if you can't manage $1, you can't manage $1 million. It ultimately doesn't matter where we're at. And so people need to listen to whoever's doing the books. If there is a legitimate reason to be concerned, we need to be concerned. No, I've met with couples where the one is concerned and maybe there's not legitimate reason to be concerned because there's just misunderstanding of how cash flows, right? So, but we have to look. And it was funny because I said, well, does he have equipment sitting around? Is he not looking at the books? Is he, like, I don't even remember exactly how every bit of the conversation went, but I do remember a couple of times they're like, oh, you do know him. And I said, I don't know him. I know lots of hims, right? Because if, let's just say his name is Joe. If Joe is not paying attention to his books, how many Joes in the farming world have I talked to? Thousands. And I'm not even exaggerating. So I've talked to thousands of farmers, and you're all doing it the same way. Most business owners are doing it the exact same way. We're struggling. Are business owners different from farmers? Not a chance. Because neither one of them are looking at their books. This young contractor that I visited with yesterday, guess what? He's doing the same thing every farmer's doing. It's business at the end of the day. And so we have to pay attention. The two people that own the accounting firm do not have insurance on each other. Step number 1, key man policies on each other. We had a lot of very cool strategies. In addition to me saying, why are you trying to sell the commercial property through a realtor? Why not just do for sale by owner? You can charge somebody a bunch of interest, still make the money you want to make, but reduce the cost of the property, and maybe it will move faster. So some things that they had not thought of. Okay, let's see. I met with another gentleman that has an off-the-farm job. He actually has a business and took an off-the-farm job so they could buy a farm. He's got some decent amount of acreage there. And they want to do some horse boarding and some arena riding, and they want to buy some poles for jumping and do a whole bunch of other things with this property, which is awesome. And so we just talked a lot about what are we going to do with all this extra money? Because he's selling the house that they were in, tons of equity. So they paid off as much as they could. Tons of equity in that house. In order to buy the new house, guess what? He had to go to dad and borrow money. Because all of his money is in his 401k, which he has a lot of money in his 401k, and it was in the equity of the house. Well, it sounds to me like it took the house a long time to sell. So they've been at the new property and had 2 mortgages. Guess what else? The bank is having a hard time understanding how why he wants to refinance a home, or just refinancing a home, because, oh my goodness, you have 2 mortgages. He's like, I've had 2 mortgages for 1.5 years. What's the big deal? Right? Now I'm trying to refinance, get a lower rate and a lower payment, and you're concerned about 2 mortgages? I've been doing that at a higher rate for a year and a half. This is the stupidity of lending that drives me insane. If I was the banker, and I always like, before I criticize the bank, I always like to put my banker hat on, right? Would I ask that same question if I were the one lending the money to this guy? Because we can't criticize some of the bank's questions, because if we were the one lending the money, we would have those same questions. But I would not have this question. He was already making those payments. He was never late with a payment. He's got tons of money in a 401k. Why are we asking this question? It doesn't even make any sense. Proof, though. Proof. He stuck all this money into his past mortgage. What good does that equity do him? None. Because he has to sell the house in order to get it. So he had to go to dad to borrow money for a down payment for the new property. Now he can pay dad back, no big deal. But he can't go to his 401k and get that money for a down payment because he's not 59 and a half. He's still working there. And yet he's putting away he was putting away a lot of money there because that's what he believed was the correct thing to do. We have to think about these things. So then I said to him, well, what are you going to do with the money from the sale of the house? I said, are you going to put it on the new property? Well, I was going to. I said, why? If you want to expand the horse operation, you want more stalls. We need jumping posts. We need, whatever it is that you need. He also has a little leather business. He does some construction work. If you can take that money and create cash flow with it, why are we putting it on the equity of the house? That doesn't make any sense. Use the cash to start a business, and then we can use some of it to start a policy. So based on the amount of cash he has and the size of the policy, he's not going to have to pay premium out of pocket till year 7. We're going to move it over very slowly for the next 6 years. And if he needs to use the cash in the meantime, he can. But he's going to have to be a very honest banker in order to do that. Okay? But stop paying your houses off early. At 3% interest right now, who cares? Make the payment. If you want to start a business, if you are farming, if you want to buy rental properties, if you want to do something that creates cash flow, stop paying the house off. You are giving the bank money that you then have to go back to them and ask to borrow and fill out all the paperwork and requalify. Why? If nothing else, put it in a savings account, and when you have enough, just apply it to the house early. But why give them that money constantly, and then it leaves you short, and then you're having to go borrow money for other things, or not be able to do other things that could create cash flow? Stop. Okay. Good morning, Shane. I had another gentleman whose wife passed away last year. And he is caregiving for his mom. He is not farming her ground because she is still crop sharing her ground. So he's like 50, I think he was 52. So I said, well, what happens when she passes away? Well, then, it's going to get divided between him and his siblings, and he's not sure what's going to happen. And he may have to buy it, but he doesn't want to lose it because his son really wants to farm. Well, if his son really wants to farm, I said, then maybe your son wants to buy it. And so you don't have to be buying it at possibly 60 years old. Even 55 years old, to go into debt like that is going to be huge. And he also wants to retire or not wants to retire, but thinking about it at 52 years old. He is in the construction business. Massive manual labor, and so we don't get younger, right? I didn't get younger yesterday, I got older. And I am telling you, as I get older, oh my gosh, like every day I have a new pain, I swear. Like, have you seen those memes that say, oh, hurt myself getting out of bed today? Like, I think that's going to be a real thing. That's crazy. Anyway, so does his son want to buy some of this land? Again, same strategy as before. We can go to FSA, get a first-time farmer loan, and go 40 years versus dad getting it, crop sharing it. And because he doesn't really have the equipment, that's not what he does. He has a business he runs. And so buying the equipment, farming it, he's like, there's not enough there to farm. So, okay, he's going to crop share it. Then he holds it till he passes away. So if the aunts are going to sell, do we want to just buy from the aunt? And then dad doesn't get it all, but he doesn't have all the loan on it either. I am seeing this a lot, that we are skipping a generation because the first generation doesn't ever give it up. Well, it's not really the first generation, but the generation living doesn't give it up. And so the next generation, why would we buy it at 70 years old? You know, because here's the thing. The generation that's living right now, they didn't get that land at 60 and 70 years old. Most of them got it when they were in their 40s or 50s because the generation before just didn't live that long. And now we're living longer. And so we're going to end up skipping generations if we continue to hand it off like we've been doing it, which doesn't make any sense to me. Next couple moved home so they could be closer to home. And they are farming. They are buying some land from an uncle. Well, they're trying to buy some land from an uncle. He's not in any hurry to get a contract written up, but he is single. He's never been married and no children. Nobody has any idea what's going to happen. And I always find this a little bit funny. These guys, I have one client that off the top of my head that is never been married, no children, but he's actually prepared an estate plan. Okay. Even though you may be single and no children, that doesn't mean that you don't have an estate to hand off. And that doesn't mean that you can't talk about it with the people that are close to you. So these two aren't really sure if they're going to get it. They're putting all this time and money into this land that they're living on and cleaning up and fixing up the house that they are supposed to be able to buy. And they're waiting because the uncle wants to do a 1031 exchange with that money. And with a 1031 exchange, you have to do it within a year. And so he wants to find his property first. But what happens if he doesn't find his property and dies? We got to think about these things, right? Like, we don't just live forever. And so as much as they've thought about it, the good thing is that they had a bunch of money. They have a bunch of money. They could pay cash for it from the sale of their property when they moved. But I said, don't pay cash for that house because they want to buy rental properties. They want to start businesses. They want to do things that they're going to need that cash for. So do those things and either finance it through the uncle or go to the bank if he wants to get paid. But don't be using your cash. Use what you need for a down payment, and the rest of it should go into rental properties or development. They want to do some VRBO stuff. Fantastic. They want to create cash flow. I love it. But don't put that money on your house then, okay? Because I just told you why with the last people. I had another lady that wants to start a medical advocacy business, which is exciting to me because we all know we get those medical bills, and are they correct? Well, it's not really on the medical bill side. It's more like I'm going to, you're seeing 5 different doctors. I'm going to advocate for you. So all of your records are shared. All the doctors know what's going on. Our medical system is a mess. And so I'm excited about that. We are not able to do anything with her right now, just because of the fact that we don't have, there's nothing to really get started, but at least she now knows kind of where she needs to be in a year or 2 from now. Then I had another gentleman that has a very successful home family entertainment business, and they have actually been expanding like rapidly, and they're doing some axe throwing, some volleyball play stuff now, instead of just the inflatable jumpers, which is typically what you see at these family event centers. And so very, like, he's got big ideas and he gets it, and it is super exciting. But his kids want nothing to do with it. They're like, we have grown up in this business. We don't want the headache of it. Thank you very much. You may sell it. And so he has somebody that is managing that business that may want to buy it. And so we talked about doing an owner finance on it. I'm like, start now. You want out in 5 years? Start that process now. Why not? Have something in writing that maybe says you still manage it or whatever that may be. But in that line of work, a bank is not essentially going to come in and be like, oh, yay, you have some jumpers and you have some race cars and you have axes thrown through the air. Yeah, we'll give you money for that. No, that's not going to happen. You have an arcade. Oh, yay, we're going to give you money for that. They don't want pinball machines. They want cash. And so him, if he could find somebody to owner finance it. We are going to stick, he's got a lot of cash on hand, so we're going to stick some in the policy to start a policy, and then some of it can be used as cash to purchase things he needs for expansion, but it's going to have to get paid back. Plus interest. It's not free money. And where is it going to go? Into the policy premium. So definitely some options there. And then I had another guy that he works mine job, I think. He was mine or power plant. He works that job, and he read Robert Kiyosaki's book, Rich Dad, Poor Dad. He now has 7 rental properties, and the majority of them he is paying cash for. So and a lot of his money he is sticking away in his 401k. He does now understand, why would I do that? Because I want rental properties. So he took money out of his 401k so that he could buy more rental properties. Because why? His rental properties are making him more money than a 401k will make him. And he's going to have tax write-offs, and he's going to have cash flow over the years. But here's another thing that he's doing is he is buying these properties, and then a couple of them he's just reselling right away because somebody wants them. So he's owner financing them. Right? So when he saw this, he's like, well, if I'm going to do properties, this just makes sense. Like, why wouldn't anybody have a policy? So combining those two things is going to be gold, right? Having a policy, you need cash flow to put it into the policy. Where's this cash flow going to come from? What are we going to do to generate cash flow forever? And he's like in his mid-50s. Here's another thing that I've run into a lot. He did the exact same thing. He took his 401k from his old job that he worked at almost 30 years. or something like that. He took his 401k from that job and rolled it into the new job. Guess what? Now you can't access it. If you would have just rolled it into an IRA, you'd be able to access it. But if you're going to roll it into the company of the new company you work with, now you can't access it because there's a rule that says you can't take money that you out of a 401k if it is with your current employer. So you have to quit in order to do that. So if he would have just rolled it into a traditional IRA or into a Roth or whatever, he would have had access to that money. Yes, he would have had a penalty, but the only other way he can have access to it is if he borrows against it. And I think he said during COVID, he was able to take out 100. I think that's what he did. I'm not certain. Because he could claim COVID. And I think he pulled out 100,000 and then bought a couple properties with that. But nonetheless, like, he was lucky for COVID in order to do that. Otherwise, we're not going to have that option. We're not going to be able to do that. So the moral of today's, like, today's theme of meetings is cash flow, which is kind of always my theme. And we just don't think that way. We are not taught to think cash flow. What other things can make us money that we're not necessarily having to work for? As much as I want to tell you this life insurance policy will let you retire income tax free and you're going to have everything that you need, that is not the truth. Yes, you are going to use the money income tax free if you do it correctly and if you listen to me and if I can guide you through that process. But if you don't put anything in, you're not going to have anything to retire on. So you need to have some sort of cash flow so that we can get it in the policy. And the more you put in, the more you're going to have to retire. So if you're 55 years old, putting in $10,000 a year, it's going to look like peanuts because it's peanuts. Nelson said one time to me, if you put peanuts in, you're going to get peanuts out. Which is exactly right. And so when we talk about overfunding these policies, we might have to just step it up a notch. Now, I'm not going to let you go so far that you're like off the rocker and you're not going to be able to pay your premium. But you might want to step it up just a notch so that we've got a little more in there earning a little more. And step it up a notch is all relative to where you're at, right? 100,000 for one person and 2,000 for another person, it's where they're at. We have to look at that. So don't go thinking, oh, I got to put 10 or 20,000 in like some other moron is talking about when he's talking about doing this concept. And yes, I'm going to call him a moron because it ticks me off. Not everybody has $10,000 or $20,000. I start lots of $2,000 and $3,000 a year policies. Okay. So where are we? Where do we start from? It is not bad. I had one guy this week that said, well, I want as much in there as I can because if I have it, I'm going to spend it. Okay. He still has it to spend, but it's not as easy as just writing a check. So the moral of that whole thing was do not roll old 401ks into new 401ks. Giving up access to money. It's like putting money into your house. Why would you do that? Just to go back to the bank and borrow more money? That doesn't make sense. If we want to do something with it. It makes sense if you want to be debt free, but it doesn't make sense if we want to do something with it. Okay? I had a... Where is he on my list? Maybe I met with him the week before. Never mind. My guy that was a Dave Ramsey coach that, COVID ruined his business. 08 and 09 ruined his business. But everything was paid off. So what do? You got to go back to the bank and say, hey, I need to take some equity out of my house, but I don't have a job now. So could you please give me some money? They're going to say, no, thank you. But good job, your house is paid off. I don't see the point. I don't like debt. I'm not telling you to have all this debt. I don't like debt. Pay off your cars, pay off your boats, pay off your campers. Like, great, get those things paid off, but your house, got to refinance it. Dave, when you watch it later, you have a good weekend as well. Good morning, Tom. Good morning, Michael. Oh, look at you, Michael. You're a top fan. Lindsay, you should be a top fan. You're here all the time as well. And Dave's not a top fan? I don't know. Facebook gives you a badge. I don't even know how it works. Okay, that is all that I had for today. And for this week, over the last 2 weeks, if you have not gotten the book yet, if this is your first time listening, you are going to want to grab one of these 3. I actually had somebody ask me the other day, well, Mary Jo, do I have to read yours if I've got Nelson's? You don't have to read mine. If you have Nelson's and you want to meet with me and you've read Nelson's book, just email me and I can send you a link to my calendar. Or message me here on Facebook and I can send you a link to my calendar. But as long as you've read one of the 3, that is all that I'm requiring. I actually had somebody ask this week, well, will you meet with the business owner? And we're talking like the guy's got, I think they said he moves $1 billion a year or something like that. I said, sure, after he reads the book. Because I'm not going to sit and explain the whole entire process. So it's in the book. So get a good idea of what we're going to talk about and why we're going to do it, and then we can talk about it. So yes, I do require that you have a little homework and that you read the book, and I do have them in audio. So you can go to withoutthebank.com or farmingwithoutthebank.com and grab those. But if you guys need anything, just let me know. I love it when you message me. So message me and I'm happy to answer and I'm happy to help whenever I can. Have a good weekend.